So you look at the headlines and you think crypto should be flying high, right? We've got interest rate cuts, trade tensions are easing up, the Fed is signaling it's done tightening, but then you look at the market and it's just a sea of red. So what is going on here? Let's unpack this whole paradox. Alright, so here's how we're going to break this down. First, we'll dive into this confusing downturn itself. Then, we'll talk about something called the Powell effect. After that, we'll follow the money to see where it's all going. We'll look at the market-wide chill that's set in. And finally, we'll cover what every trader is watching right now. Okay, first up, let's just lay out the scene. Because this really is a story of two completely different realities clashing with each other.
I mean, just look at this. It's like the market has a split personality. On one hand, you have all this great news. The Fed cut rates. Things are cooling down between the US and China. Quantitative tightening is supposedly over. These are all things that should be pumping gas into risk assets like crypto. But then you look at the market reality and it's absolutely brutal. Bitcoin's tanking, Ether's right behind it, and $1 billion just gone. It makes no sense.
This, of course, brings us to the core question of this whole thing. If the good news isn't moving the needle, then what on earth is?
Well, the answer seems to boil down to one person, Jerome Powell, the chair of the Federal Reserve. You see, his words have incredible power, and he just dropped an absolute bombshell of uncertainty on everyone. And this right here, this is the quote that did the damage. The Fed had just cut rates, which should have been a celebration. But then Powell stepped up to the mic and basically poured a bucket of ice water on the party. He said another cut in December is not a foregone conclusion. Far from it. That phrase, far from it, sent a shockwave of fear through the markets.
So what he did is what the financial world calls adopting a hawkish tone. It's just a fancy way of saying he sounded tough and really uncertain about making things easier for the market anytime soon. And when investors hear that hawkish tone, they get scared. They pull their money out of things they see as risky, and yeah, that definitely includes crypto. And you can see the impact almost instantly. Before Powell started talking, the market was pricing in about a 90% chance of another rate cut in December. It was almost a sure thing. Moments after he finished speaking, that certainty crashed all the way down to 71%. That is a massive swing, and that kind of whiplash is exactly what panics investors.
And to make it all worse, traders feel like they've seen this movie before. The last time the Fed ended a round of quantitative tightening, back in 2019, Bitcoin's price got hammered, dropping 35%. That memory, that historical echo, is absolutely haunting the market right now.
Okay, so we've established the fear. Now let's follow the money and look at the actual, concrete evidence of people running for the exits. And here's the big, scary number. In just 24 hours after Powell's comments, more than $1.1 billion worth of crypto positions were liquidated, just wiped out. That's a staggering amount of capital disappearing in the blink of an eye, and it's a crystal clear sign of a market in panic mode. And check it out, this wasn't just one group of investors getting spooked. The sell-off was happening across the board. You had the big institutional money pulling out of ETFs, you had veteran, long-term holders, the diamond hands, finally deciding to sell. And of course, you had all those active traders getting liquidated. It was a full-scale retreat.
Let's dig into that institutional side for a sec. The US spot Bitcoin ETFs, which are a major on-ramp for big money, saw an average outflow of 281 Bitcoin per day. That is a really weak signal, and it tells us that the so-called smart money is hitting the brakes hard. But honestly, this might be the most telling number of all. On-chain data is showing us that long-term holders, we're talking seasoned crypto investors who usually ride out any storm, are selling around 104,000 Bitcoin a month. They're selling into a market that's already getting weaker. When the veterans start to cash out, you know something's up.
And you know, this chilling effect isn't just a Bitcoin problem. Not at all. In fact, what just happened with Solana might be the best example of how this negative feeling is dragging down the entire crypto space. I mean, Solana was supposed to be having its big moment. The first ever US spot Solana ETFs just launched, and they came out of the gate swinging. The Bitwise ETF pulled in an incredible $116 million in just 2 days. By all accounts, this is the kind of news that should have sent Solana to the moon. But that's not what happened. Instead, Solana's price dropped 8%. It wiped out every single gain it had made for the entire year. Think about that. Hugely positive project-specific news was completely and utterly steamrolled by the negative macro fear that's gripping the market.
And that really brings us to the big takeaway here. It doesn't matter how good the news is for any single crypto project right now. Nothing seems to be able to escape the enormous shadow being cast by the Federal Reserve. The macro mood is king.
So, that's the grim picture. Where do we go from here? With all this uncertainty, what are the key signals that everyone is glued to right now?
Well, it pretty much all boils down to two things. First, everybody is waiting on the Fed's next move. That December meeting is circled on every trader's calendar. We need clarity. And second, we need hard economic data. Once the US government reopens and we start getting official numbers again, that could paint a much clearer picture of what's going on, and maybe even force the Fed's hand.
And that leaves us with this final, massive question. The market is completely rattled, caught in this tug-of-war between the Fed's words and what's actually happening in the economy. So, will the next big move be triggered by Jerome Powell changing his tune, or will the economic data itself become so undeniable that it forces a new direction for the market, no matter what anybody says? That is the billion-dollar question.